first-time buyer, you may be thinking to yourself, where do I start? What is the process? And what checks do I need to do? Well, in today's video, we're going to be talking all about this in more detail. Hello, welcome back to our channel and podcast. My name's Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then please subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Iftika joining us again. For those of you who don't know Ifti is a trained accountant and mortgage broker who's been in the industry for over 10 years, and he is one of the founding directors here at WIS. Welcome back, Ifti. How are you doing today?
Hi, I'm very well, thank you. How are you doing?
Yeah, good. Now, for those of our viewers that haven't seen you recently, they might be wondering what this moustache is for. I must admit, it's growing pretty well, isn't it?
Yeah, I know. It's it's slow for me than some of the others, but it is growing. I'm not used to having a moustache, so it's something kind of new to me as well. But obviously, we are sort of collecting some money for charity. It's to do with men's health, right? So it's the Movember, obviously, I think that's something very popular. A lot of people know. So we are collecting money as well. And that's what this badge is all about as well, right? So, this is one of the areas we are collecting money for. That's for prostate cancer, right? So we are supporting those trusts, right? So that's kind of what it is. So if you do have some money you can spare, please do donate to this because it is definitely a good cause. So thank you very much.
Yeah, actually, by the time this goes live, there will be a video that I've posted with our link and everything, especially for Movember. So if you do want to donate, guys, please go to that video. I'll link it to this one so that you can see it, and it gives you all the information to donate if you wish to do so. But today we are talking about the mortgage process for first-time buyers in 2022. Because, as a first-time buyer, it's one of those things, isn't it? You kind of decide, I want to get a mortgage, I want to buy a house, but often most people kind of say to us, well, what do I need to do first? Like, what is the actual process? So today we're going to be talking in more detail about the process itself. So if we start really at the top of the process, I guess the first thing really is a consultation call, right, Ifti, with a broker or a lender.
That's right. So I think this is like a icebreaker effectively, right? So you call an advisor or a broker and talk to them. Just this is your basic information. This is what we do, right? So we have a 10 minutes call just to understand whether a mortgage is actually possible. We ask things like the income details, your commitment details, and your credit profile sort of thing. So those are the main three areas we look at. So if we think that's all looking positive, that's when we move to the next stage.
Which is our document check stage. Just let everybody know what's involved with that for those that don't know.
At this stage, we generally do something called a fact find, right? So that's the term that the brokers use. So we are trying to get facts about yourself. We're looking at more detail, right? So at this point, we'll probably ask your pay slips and we will ask for maybe a credit file of yours. I mean, we use systems where we can download credit files, so it doesn't really cost you any money. So you could sort of speak to us about that. So we will review your credit file and we'll look at all your bank statements and all that in detail, right? Some argue, do you need to do it at this stage? I'd say yes, because if you have a problem, you rather know it now than do it a few months down the line when you've actually found a property. So it might be a very good idea to do this exercise at this stage. So if you do, we will know the exact situation of your finances. That's what we try to do at this stage.
All right. And then the next thing we do is what we call an affordability check.
So the affordability checks is obviously now we've looked at your documents, then we can work out how much you can afford. Because if your bank statement has regular commitments, right? I always use this example. If you have expensive hobbies, we might have to factor that because a lot of people don't say it. But when the bank picks it up, if you regularly, have a expensive hobby, they put it down as a commitment, right? So you don't want to know this later. You probably want to know this now, right? So we will go through that and we will do a affordability calculator to see how much you actually can borrow, right? Whether it is say 100,000 or whatever the number is, right? So that number is more or less accurate because we will use the systems that the banks give us. There are some tools that banks have. They call it affordability calculator. We use that, right? So if we put in the exact details, there's very unlikely that the numbers can deviate, right? So that's kind of what we do next.
Yeah. And then the next thing we do after that is our market research, isn't it?
That's right. Yeah. So once we know roughly what you can borrow and you are comfortable, then we'll start looking at products to see how much a mortgage will actually cost you, right? Sometimes, people say, I can see interest rate of say 2% out there, but whereas that may not be the cheapest product, right? Because there might be a 2.1% mortgage, but whereas product fees are lower and there's no valuation fee, that may end up being cheaper. So that is the kind of research we do. So based on what you actually need to borrow, we will do this. Usually at this point, we produce something called a key facts illustration. Or in layman's term, it's like a quotation to say this is what it is, right? So that's what we do at this stage.
And I think it's interesting to note here, because I think a lot of people get confused about this, but they go on to, certain websites, they find a quote and they're like, oh, but actually there's a rate that's cheaper online. But, I think one of the things for people to bear in mind is that unless you give all of your details to a broker or an advisor, that might not be affordable for you, that particular rate, right? So it's definitely worth having this conversation with an advisor or broker, because then you can really understand the true amount that you might be able to borrow. What you see online isn't always the quote that you might get, right?
Yeah, that's right. So you definitely want to do that, because each lender have lending criteria and their income multiples are different. So the answers can be different. Some banks, even though you have good income, they might say, sorry, you earn in a different currency, so we can't give you a mortgage, right? So that won't work. So you need to do these workings properly. I get this every time. People say, oh, I found a deal at 1.5%. Why can't you get me that, right? You can, but your circumstances have to be different, right? Your bonuses won't be counted by that lender. So each sort of lender is very different. So that's why it's always best to get some advice on it. Because the last thing you want to do is go to that lender and then realize, oh, I actually can't get that mortgage, right? So then, you might have taken a hit on your credit score and it might affect your next application. So that's something that you have to be very mindful of. Yeah.
Definitely. Because the next step actually is the agreement in principle, isn't it?
Yeah, that's right. So once we've done the affordability and once we've looked at the KFIs, we've explained to the clients what this KFI is about, then if they're comfortable, we will run an agreement in principle. As much as possible, we tell clients to do a soft credit search. Because a lot of lenders allow you to do this, but some lenders don't, right? So you have to be very mindful, especially if your credit scores are not as great. You probably want to not run a hard credit search. You probably want to just do a soft credit search, because once you run a hard credit search, if it fails, you will take a hit on your credit score as well. So that might affect your next application. So just be mindful. So that stage we do agreement in principle. Agreement in principle will tell you in principle how much you can borrow based on the information that you have submitted. So that's why I said we generally best to check documents before we apply, because otherwise your final answer might deviate from what it is, right? Because at the end of the day, it's the underwriter's discretion at the end, right? But we generally know what underwriters think like, right? So if there's anything unusual, we quickly spot it before it goes to the bank, right? So that's what we do.
Yeah, and I think it's interesting to note that actually a lot of people, I think, start looking for their house first and then they do this. But actually it does kind of make more sense to kind of have a full understanding of how much you can actually borrow before you start your house search, right?
Yeah, that's right. I mean, often I find this. People say, I found a house, it's 300,000, I need a mortgage, but they can only afford 200,000 or whatever it is, which is short, right? So you probably want to do this process before you look for houses, because otherwise you may have ended up wasting your time.
And then after you found your dream home, I would say that it's good to sort of arrange a second viewing.
Yeah, that's right. So yeah, once you found your dream home, it's always good to do a second viewing. Often I tell people, take an experienced landlord or somebody who's bought houses before along with you, because they might see stuff that you don't, because sometimes you're blinded the first time you go in.
Yeah, you're just like, this is the one. You don't think.
Yeah, I know.
You don't.
I mean, I often hear that, right? Then the second time they go, they say, oh, there's a crack in the wall and there's something outside which is unusual, which I didn't see the first time, right? Move the sofas. Just tell the people that, you want to see the house properly, right? Move the sofas, move stuff here and then have a look, right?
Yeah.
Usually they will accommodate this, right? Obviously, it's a big asset you're buying. It's probably the most expensive asset you're going to buy in your life as well. So you have all the right to ask for it, right? So please do ask for it.
Now, I would also suggest going at a different time of day. So if you went in the morning, definitely try in the afternoon, or if you went on a weekend, try on a weekday, just to see how busy the roads are, like if it's near a school, like how busy that is, or how the light is in the house or flat. Like it really does make a difference.
Yes, that's right. Yeah. No, I know one of my clients who bought a house in a very busy area. There, where the house is, very close to few nightclubs, right? So during the day, it's very, very quiet, right? But in the night, I'm telling you, when you want to sleep, it's not the best place to be in there. So you probably want to check this out at different times for sure. Yeah.
Yeah. And then after that is when we suggest making an offer, don't we?
Yeah, so once you're comfortable, you can make an offer. It's formal, but just be mindful. A lot of people don't know this. Just don't say, yes, I'm offering 100,000 on the house. That's not what it is. You need to say what you need to include in your offer as well, right? Do you want the curtain poles? Do you want the chandeliers? Do you want anything else left back? Include those, right? Because a lot of people say, my offer is so much, right? What about the white goods, right? Because sometimes white goods are not included. The seller sometimes come back and say, do you want the white goods? You've got to pay another 100,000 pounds, right? So, they will try to do that, right? So you probably want to negotiate those things if you want anything else included. Include all this before you make the offer. Make the message very clear before you have something in writing.
Definitely. And then make a mortgage application.
Okay, so once the offer is accepted, you will have to make a mortgage application. That's when you actually go to the lender and say, oh, I've got a decision in principle. Let's run a mortgage offer. Now, sometimes what happens is between the time we got the decision in principle and the time you make a mortgage application, so rates may have changed. There might be a better lender in terms of overall cost, right? So we may have to go to another lender. So that can happen. Yeah. But if not, if you're going with the same lender, half the job is done when you do the decision in principle. The next bit is to actually formally submit the application, right? So at that point, we might come back and say, we need updated bank statements from you or something else, which, if it's taken a few weeks, we might need that. But we'll take that and we'll submit that to the bank. So that's what happens in the next stage. That's when, the bank actually starts looking at the application in detail.
Yeah, and then the fun starts. So that's when we do the valuations, right?
Yeah. So valuation, there are 3 types of valuation. Bank will do a basic valuation. Some banks will allow you to upgrade to something called a home buyer survey. But if you are looking for an older sort of property, I generally recommend that you do a structural survey, right? I'm not saying don't do it for newer ones, but definitely you need to do this for an older property. But you have these 3 options, right? So you have to make a call. Sometimes the banks don't offer this as a service. You may have to get it from a third party. But the bank will always do a basic valuation.
Yeah, this is the thing that I hear most people say they regret the most if they have problems further down the line. They're like, oh, I wish I did full survey instead of just the basic one.
This is why I tell people, look, this is probably the most expensive thing you buy in your life, right? So there are certain things you should not compromise, right? And especially if it's an older property, just do a proper survey. You do not want to know the issues later down the line, right? Because those might be costly, especially if there's a structural issue which is not picked up on a basic survey. Costly business, right? So, you may not even have the money because you just spend all your money on buying the house, right? To get that right. So it's always a good idea for you to do that, yeah.
And then after that, the offer's issued. So what does that mean for our home buyers?
So that is good news. That's a formal document from the bank to say they are happy to give you the mortgage. So they will put some special conditions sometimes on your mortgage offer. So you have to go through the mortgage offer very carefully. That will probably be your final binding document that you're getting from the bank, right? So they will stick to that so long as your circumstances don't change, right? So if you lose your job or something like that, you need to tell the bank, right? And they will withdraw your offer. But otherwise, if the circumstances remain the same, you're fine. They will honor the offer, right? So yeah, that's what it means.
And then what we do is insurance checks. So what does this mean for everybody?
Okay, so insurance, there are few types of insurance. We just need to make sure that if something happens to you, the mortgage is paid off, especially if there's a family involved. You don't want them to be not having a house and not having income, right? So we say life, illness, right? If you're not well, there is certain insurance you can buy which will pay off your mortgage, right? Which takes off a lot of your headache and, things like accidents and things like that. So there are different types of insurances that you can get, right? So I'd say, discuss this in detail. A lot of people leave it, right? And they completely forget because they're in the process of buying the house, right? Remember, if you have exchanged and you don't complete the purchase, let's say something happens to you,
Yeah.
your family, the remaining family still is obliged to buy the house, right? So they may not have the money and the circumstances have also changed, right? So it can be a big problem for the family. So just make sure you have these conversations earlier on. Sometimes, I mean, these are I tell clients, if you do have health issues, it might be an idea to discuss your insurance early on as well, right? It's not a bad idea. Don't keep it till too late, right? Because if there's health issues, sometimes the insurers have to write to the doctors or getting a medical report, and they will do certain things. They may send a nurse to your house. Those things do take time, right? So if you do have medical issues, you probably want to highlight this earlier on. Yeah.
I know, it's definitely one of those things that I think a lot of people think, oh, it's going to be fine, nothing's going to happen to me. But I actually know someone that did purchase a house with his wife, and on the honeymoon, he actually passed away, and he was only, mid-30s. So, it can happen. So that's definitely one thing that I would definitely recommend, to make sure you get your insurance sorted.
Definitely, yeah.
Okay, next thing, exchanging contracts.
Exchanging contracts is, we always say, the point of no return, right?
Yeah.
So that's when you put a 10% deposit down, or if it's a 5% deposit mortgage, you put your deposit down, and then you all exchange contracts. The buyer and the seller exchanges contracts. At that stage, you all sort of decide when the house will complete, which means when you're going to get the keys. So at the point of exchange is the point of no return, which means you have to be very, very sure that this is the house you're buying, right?
So you can't really pull out after that,
No, that's right. So because you sign your contracts and sign your mortgage deeds and all that sort of thing, and you send it across to the solicitors. So you just need to make sure that you're very, very comfortable completing the transaction.
I know there might be a few first-time buyers that have sat here thinking, what can go wrong between exchanging contracts and completion? Like, do you have any stories?
A lot can go wrong. Oh, yeah. I mean, a lot can go wrong. So I used the example before, right? So if you lose your job between exchange and completion, your circumstances has changed, right? So technically, you got to tell the bank that you have lost a job, right? So that may not go down very well with the bank, because, that's what it is. Your circumstances have changed, right? So usually, we tell people to keep that gap to a very minimum, right? Sometimes for practical reasons, you can't do this, especially with the new build, exchange and completion, there can be big gaps. But most of the time, you can minimize that gap. Generally, a lot of banks ask for 5 days between exchange and completion, but just be very sure that you can complete when you're doing exchange, right?
Yeah.
So that's why, we were talking about this insurance as well. Make sure your insurance is live at the point of exchange. Sorry, I did miss out on one thing, your home insurance, right? So at the point of exchange, you need to have the home insurance in place, right? Now, home insurance, as far as I know, it's compulsory with all other lenders, right? So with the home insurance, what happens is, if there's a damage to the house after exchange, you're liable as well, right? I've had this situation where a client moved in, the back wall has been sort of knocked down by a lorry, right? So, it's very odd, but it can happen, right? So make sure your insurance is in place, right, before you exchange, right? So, yeah.
And just to give everyone an idea, if you are buying a new build, what are you looking at in terms of between exchange and completion? Is it, it's not 5 days, is it months? Can it be like 5 months, 8 months? What are people looking at?
Yeah. Okay. So for new builds, it could be any period of time. So usually when you book a new build, they tell you to exchange in 28 days, right? But the house might be ready next summer, right? That might be, 9 months, 10 months away, right? So you might have to wait till 10 months between exchange and completion. So it could happen. And quite often banks only give you a mortgage offer valid for 6 months. Either you have to sort of extend it, or B, you may have to get another mortgage offer, because by that time the offer would have expired, right? Usually for new builds, it could be much longer. But if the house is ready in a new build, right, that could be sort of either simultaneous, or it can be sort of a very short period sort of thing. But quite often new build, there is a gap between exchange and completion, because a lot of developers exchange, get the approval, they go and borrow the money, and then they build the house, right? So that's kind of what happens in the background. So it could take some time, right? So, yeah.
Are there any lenders that lend specifically for people looking to buy new builds, so that they don't have to extend the offer, that it's just longer?
Not that I'm aware of, but some lenders give you a 9 months valid offer. And often what happens is, you go and talk to them and they extend your mortgage offer, right? But there's no guarantee. So they might want to check your circumstances as well at that stage.
Yeah.
So you just go and talk to the lender and you can potentially extend your offer, but there's no guarantee, right? So you can't ask that question earlier on as well. We can only share experience with a particular lender saying, this lender was okay in the past, right? So that's all we can say.
Yes.
But there's no guarantee because you need to ask the question at the time.
Thank you, Ifti. Some more great advice there. I just wanted to put our regular reminder out there that these points may or may not be applicable to everybody. So if you are unsure if they're suitable for you, please get in touch with an advisor. And if you don't have an advisor, I will leave Adobe's contact details below, as we are always more than happy to help. Just a little reminder that as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.